Hey guys, my name's Ravi Sharma and I'm the founder and buyer's agent here at Search Property. Thank you so much for joining me on yet another episode of Search Property TV. If you're new here, please smash that subscribe button, hit the bell icon so you know when I'm dropping these videos every single week. I drop about 3 to 5 videos every single week about the Australian real estate, economy, and of course, personal finance and passive income. If this is of interest to you, then I definitely would consider subscribing to the channel. It does support me a lot and it allows me to continue putting out content here on YouTube for free consistently. Please smash that subscribe button and let's dive into this video, which is very exciting for a couple of reasons. Mainly because I love regional properties. I've been investing in them for 6 years, and that doesn't mean I'm against capital city properties, but I just know when I'm investing, I want lifestyle. I want to know that I can take care of my mortgage repayments and the other costs of holding an investment without actually giving up my lifestyle. And of course, I'm young, much like your own self, where you want to enjoy life and have property create choices, not take away choices from you, and of course, create more anxiety and stress. Now, I'm a buyer's agent based in Sydney, but I purchase property in regional New South Wales, all of Victoria, all of South Australia and Tasmania. So if that is of interest to you, you can definitely hit me up. However, this is not about that. This is about getting free education out there for you to keep aware of what is myth, what is fiction, and what is fact. So please continue watching, and if you like what you see, and definitely drop me a like down below. Let's dive in. Is a structural shift in housing demand leading to a regional housing boom? A short answer, yes. Definitely biased, but whatnot. There has been a high level of interest as to whether the pandemic has spurred housing demand in regional markets of Australia. Housing market data is suggestive of this, especially across the largest capital cities. Rental value increases are positively correlated with greater distance from the CBD for the largest capital cities. The latest Corelogic indices show growth across regional housing markets is higher than capital cities in both quarterly and annual terms. In my latest video, guys, if you haven't checked it out, definitely do. I do share some data that Corelogic shared last week, and it basically goes through as a total return across the year and across the last quarter. We have seen regionals outweigh and outgrow the capital cities. Now, of course, not everywhere in regional cities will grow, and it just comes down to the research component of knowing what is the desired streets or what are the desired streets versus just going out there and looking at yields, because that's definitely not the play here. We want both capital growth and cash flow. The chart below shows the rolling annual change in dwelling values across the combined regional market compared with the combined capital cities market. Values across the combined regional markets increased by 4.8% over the year compared to 3.7% across the capital cities. The reason I am so bullish on this is because of the cash flow component. Now, most people say, well, you know, buy regionally, you'll get no capital growth. Well, to those guys, I say, did property 20 years ago stay the same price as what it is now? No, it didn't. In regional areas, we had markets that were, you know, $30,000, $40,000 worth where you could buy a house for that much. But now, to get into those properties, it costs you anywhere from $250 to $350. So that's where I understand that it's about supply, demand, and uniqueness, and what can be offered in a diverse economy. When we're looking at 4.8% capital growth over the year compared to 3.7% across capital cities, we're really realizing this is just the capital growth perspective. We're also getting yields of 6, 7, 8%, which is definitely pushing us into positive cash flow territory. And that's where you're able to really grow a portfolio really quickly. We can see here, New South Wales. So obviously in the orange is the regional market. The light blue is greater capital city, and inner city SA4 region is the dark blue. We can see in New South Wales that clear spike of regional and how it's performed. Victoria, obviously just at 0. That's actually a really good result given that the rest of the capital city has fallen by 5.6% and 6.9%. Queensland, sort of a flat market there, but still some growth and definitely more growth in the regional markets. South Australia, this is one of the reasons I've been so vocal about this. If you haven't checked it out, I've got a video out that I brought out probably about 2 or 3 months ago. And this was before everyone jumped on the bandwagon and started saying Adelaide is the hotspot. I've been talking about this for ages. You should definitely go check out, the best places to invest. According to me, of course, it's my personal opinion, but I think it'll bring you a lot of value. I think it's almost at about 6,000 or 7,000 views. So definitely go check that out. Western Australia seems like it's a bit of the same old story. Obviously, with the regional markets in Western Australia, heavily reliant on the mining sector. I don't like that. I don't invest there. With Tasmania, they are getting some really good growth both in regional markets as well as their capital city. The rate of annual change in combined regional dwellings has not outpaced the capitals since October 2019, when the largest capitals were moving through the end of a downturn. Through the COVID period to date, March 2020 to October 2020, values across the combined regional areas increased by 1.7%, while the combined capital cities fell by 2.3%. The chart below shows the same trend across the states, with the exception of Western Australia. Now, something I want to bring to your attention is this regional boom, these regional values increasing, is not just because of COVID. COVID was simply an accelerator in this whole process. The reason I was investing a long time ago into regional areas was because I could get lifestyle. Having the ability to have those strong cash flow and still get capital growth meant I could grow my portfolio. You must have seen a video I've put on this channel, 13 properties I own currently. It's not about how many properties you have. It's about the purpose of each property and what they do to providing you financial freedom. What I like is the fact that you can get in at a more affordable rate. It allows you to diversify your risk by purchasing multiple properties across multiple locations. Now, with COVID, that occurred this year, and it's obviously done really well for markets across the regionals. However, it's not just about COVID and what it brought about for regional properties. They've been growing before this. It just means there are more eyes on it now, and now the mainstream media is actually talking about it. This is when we can see that snowball effect really take action and take effect, because now more eyes get onto these properties. They realize that with their perspective, if in Sydney I have to buy a property for $1 million, well, that can get me 4 properties for $250,000 across 4 different states. Now you don't have issues with land tax, and of course you diversify that risk. In each city, inner city markets are still showing relatively weak performance. This is because inner cities have historically seen greater housing demand from renters, particularly those from overseas or working in the industries that have been acutely affected by the pandemic. For obvious reasons, migration is low, and of course that is now affecting the inner city circle. However, it is noteworthy that regional Australia has previously outperformed capital cities markets based on cyclical patterns. Capital city markets generally have higher volatility, meaning returns are higher during upswings and declines are deeper during downswings. This is also evident in the rolling growth chart above. This is very, very important because as an investor, you want certainty, right? Now, it's all well and good when things are rosy and markets are booming, and that's when you can take advantage of, upswings of like 10, 11%, but it doesn't happen consistently. If you take Sydney as an example, we have a situation where for years we were getting, anywhere from 7 to 12 to 15% annual growth. Whereas if you invested regionally, you're probably getting 5, 6, maybe 7%, depending on where you invested. Now, during the downswing, being from really 2018 through to 2019 before the election, in a year, or the last 2 years really, you've seen little to no growth. In fact, in some areas, you've seen declines. Now, while that was happening, regionals still kept performing time and time again. It's that certainty as an investor that really attracts me because one, I've got rental demand, vacancy rates are super low. You also don't have the zoning in these areas where a developer can come in and suddenly in 2 years' time, you've got a block of, 150 new apartments. It doesn't work like that out there, and I think it will fundamentally change over the next 20 to 30 years as demand increases and supply can't keep up. But for now, you take on the opportunity where you can, and when that day comes, if you're located strategically to, the location itself and the inner CBD of these regional centers, well, you're going to get a massive payout because developers are going to come and pay you. But essentially, the volatility is just not great for an investor. And for me, when I'm talking about building a foundation of properties, when you're building out that foundation, you want certainty. You don't want to go, hey, 1 year I've made this much money, but for the next 2, I didn't make anything. That's not how it works. And I don't think fundamentally you're able to grow a large portfolio following those principles. This means that a snapshot of capital growth may not be enough to support the idea that structural shifts caused by COVID have been the reason that regional areas have outperformed. Sales data has also not highlighted consistent trends in demand. In 3 months to October, Corelogic modeled estimates suggest the growth rate in sales was 12% across Sydney, but a lower 10.9% in regional New South Wales. In Melbourne, sales volumes fell 18%, while regional Victoria saw an uplift of 3.7% in sales. Sales data is also a difficult measure of demand through the pandemic, as sales has been highly volatile in response to social distancing restrictions. This is definitely a point I will attest to, is the fact that, during this period, property listings are at all-time lows. We need to take data with a grain of salt. Everything is lag data, so what we're seeing now is what happened, say, 6 months ago. So we're really still feeling the full effects of this. I am on the ground talking to agents all the time. Now, of course, when supply is diminished and we've got listings so low, and we still have all this demand from, buyers wanting to invest and buyers wanting to live in, you are really pushing up prices. Now, we haven't seen that in Sydney. We still have listings really low, but there hasn't been that demand. Now, from a rental perspective, as an investor, you would much rather be in a market where the vacancy rates are so low. You definitely still have the ability to get renters in. Whereas, again, in Sydney and Melbourne, you really haven't had that. However, you can't just base the fact that, hey, we're having a regional boom or we're having an Australia-wide boom only on the fact that, COVID's really been a short period of time historically. In my experience, it has performed time and time again if you've invested well in good locations. I don't think you can simply go based on what we've seen across 6 months during COVID that, oh my God, yes, we definitely do have a boom here. I think we are seeing the fundamentals for one, we're seeing the early signs for one, but I think it's going to really come down to the next 3 to 6 months for us to realize one or the other. What we learned from the ABS this week: provisional data from the ABS showed internal migration patterns for Australia at a greater capital city and regional level during the first few months of the pandemic. Internal migration tracks the movement of people from one part of Australia to another. Without the publication, greater capital city and regional movements from 19 to 20 financial year would not have otherwise been available till next March. In the June quarter, when Australia faced its highest levels of government stringency in response to the pandemic, the net loss across the combined capitals Australia was 10,500. This was a record low in net internal migration. An internal shift of people from cities to regions is likely to have least partially contributed to better performance in regional markets. But migration from capital cities in Australia have been persistently negative for over a decade. Net internal migration has been trending lower since early 2015, which was a time of worsening affordability in the largest cities. As housing prices peaked and trended lower, internal migrations trended reversed. This suggests housing affordability could be a key driver of movement to regional Australia that was evident well before COVID-19. This is exactly what I've been talking about, guys. It's not just about COVID-19. It's not just about these 6 months that the pandemic's been around. This is a bigger issue about affordability. We have had little to no wage growth, right? So when you're seeing prices still go up, you've got asset price inflation, we're going to see that at whole new levels. So what are we going to see moving forward? Are we going to see increased internal migration towards Sydney and Melbourne, where prices are going 1 million, 1.2 million, 1.4 million? No, I think the opposite's going to happen. And I think fundamentally, it's again, just a floodlight straight onto the regionals to go, wait, hey guys, we can actually move away because now we can work from home. But this trend, as suggests in the article from the research team at Corelogic, this started occurring well before COVID happened, and it's just going to continue. Unsurprisingly, as stage 2 restrictions eased, migration trends showed a shift away from dense cities that saw high levels of COVID-19 cases. Melbourne saw the biggest drop in net internal migration, with almost 8,000 people leaving the capital city. Now, again, take it with a grain of salt. Obviously, Victoria was the hardest hit, and Melbourne obviously being the CBD there. So I don't think it's as big a deal as the research article is suggesting. However, it still plays a part. However, a deeper dive into the ABS data shows the story is not as simple as COVID-19 driving city dwellers to coasts and hobby farms. Intrastate departures from Greater Melbourne, the movement of people from metropolitan regional to regional Victoria, has already been trending up with capital housing prices from 2017. Essentially, affordability is the big key driver here. The June 2020 quarter saw a record high level of departures from city to regional Victoria at 11,746. But this is only 3.1% higher than the previous peak in intrastate departures, which was well before COVID in December 2018. And you can see there's that trend up, and I think it's going to continue happening well after COVID-19. Brisbane defied the trend of intrastate departure and saw a significant increase in net internal migration. Importantly, the biggest net gain to Brisbane was from the rest of Queensland, which refutes the idea that COVID largely spurred migration away from Brisbane to regional markets within the state. I think with Brisbane, it's different. In Queensland, we're seeing more people go towards the city, whereas I think in New South Wales, South Australia, and with Victoria, I think they're moving away, and that's more of an affordability play. Ultimately, the combination of housing and population data highlights that in some parts of the country, COVID-19 may have spurred an increase in the movement to regional Australia. This has at least partially contributed to an offset in the decline of values or an increase in values through the COVID period. However, migration data suggests the narrative does not appear consistent across the country and highlights the affordability is an important driving factor of the departure from cities. Guys, I'd love to know what you think here. I know that I'm very pro regional cities and centers, but of course I don't shy away from the fact that I still would like to buy in capital cities. And if the opportunity is there, I'm definitely on it. In Adelaide right now, we're purchasing, and that's in the CBD. What I really want to highlight to you guys is that COVID was simply an accelerator in this whole process. It really has pushed us to realize that we can work from anywhere in the country and that we've got technology well advanced to what we thought we could do. And so now people can work from wherever they like, enjoy their space at home, and now they're valuing other things like family time and work-life balance because they're working from home. So I think this shift is not only been because of COVID, I think it's been happening way before COVID. It's just now that the floodlights and the attention is coming onto the regional markets, and it will convert into growth because we've got, even extra 2 or 3 investors go into these markets. We've got increased demand, and that's definitely going to push up prices with supply so low. I thank you so much for watching all the way through, guys. On this channel, I try and bring as much value as I can, but it's not always possible. So that's why I've created a private Facebook group, Passive Income and Australian Real Estate Tips. There's a link in the description below. I really want to get you to join, and I want you to be part of the community with like-minded individuals where we're sharing ideas, creating this environment which becomes very empowering to allow you to achieve and increase your financial literacy. I also have an Instagram page. Definitely follow me on there. I'm now going to be posting every single day, and I want to bring you guys unlimited amount of value for free. Now, if you guys want my help as a buyer's agent, then you can definitely contact me. But the point of these videos is to get out as much free education as possible. So by simply liking the video and sharing it with someone that needs to hear this sort of thing, definitely supports me, and I appreciate it from the bottom of my heart. Thank you so much, guys, and I'll catch you guys in the next video. Thank you.